Welcome back to Commercial Connections, Investing with Confidence. Today, I want to go deeper on the single factor that shapes multifamily markets long before most owners realize what's happening, and that's supply. If you understand supply, you can usually anticipate changes in values, rents, and buyer behavior well before they show up in pricing or headlines. In the Eugene-Springfield market, we just came through one of the largest multifamily delivery waves the market has ever seen. Between 2022 and mid-2024, new units came online at a pace that we had not experienced before. That wave didn't break the market, but it absolutely changed the short-term dynamics. Vacancy rose, rent growth slowed, and the uncertainty increased. The reaction was understandable, but here's the part that matters the most, and it's the part that often gets overlooked. That supply wave is now behind us. Today's new construction has slowed dramatically. The current development pipeline is down by more than 80% from its peak, and very few projects are actively moving forward. This shift is critical. Markets don't recover because demand suddenly explodes. They recover because quietly supply gets shut off. This process does not happen overnight. It happens in stages. First, vacancy stabilizes, then absorption improves, then concessions disappear, then voila, rent growth resumes. Then confidence returns. Confidence is always last. Owners often wait for confidence to return before acting, but by the time the confidence is observed, the advantage is already gone. Let me share with you what I'm seeing locally in our market. I've seen two nearly identical University of Oregon properties perform very well based purely on timing. One owner tested a market while deliveries were still peaking. Buyers were cautious, underwriting was conservative, and leverage sat squarely with the buyer. Another owner waited until the delivery slowed and the pipeline dried up. Buyer conversations changed. Lenders became more comfortable. The property itself didn't change, but the pricing and the leverage did. That's why timing is not about predicting the peak or the bottom. It's about understanding the environment you're operating in. Another layer that matters here is lender behavior. Lenders follow supply closely. When supply is heavy, underwriting tightens. When supply eases, terms loosen quietly. That shift often shows up in loan quotes before it shows up in sales prices. If you're not watching supply, you're missing the early signals that lenders and buyers are responding to. There's also a psychological component. During heavy supply periods, buyers slow down. They wait. They assume more options are coming. When the supply shuts off, that mindset shifts. Buyers become more decisive, not because the market suddenly looks better, but because they realize that their choices are narrowing. That's when leverage begins to move back towards the seller's favor. This is why I tell owners that supply awareness creates options. When you understand where we're at in the supply cycle, you are not forced to act. You can choose to hold, you can choose to refinance, or you can choose to sell, or you can simply wait with confidence. Options create leverage, and leverage creates better outcomes. That's why the supply is often the most important story in the Eugene-Springfield multifamily market. One thing I'm watching closely right now is how quickly well-priced, well-located, older properties are getting attention again as new construction stays on the sidelines. Thanks for listening. If you found this helpful, please make sure and hit subscribe so you don't miss future episodes and market insight. And if you'd like a clear picture of what's happening in the Eugene-Springfield multifamily market, visit eugene-commercial.com to download a free market snapshot for Eugene-Springfield apartments or the University of Oregon area. You can also schedule a free 15-minute discovery call there if you'd like to discuss your options.